Hey everybody, it's me, Gregory Mannarino. How are you today? Welcome to my newest segment of Markets A Look Ahead. I like doing this. It's kind of fun. Tries, at least attempts to make some sense of what's going on here in this crazy market, to say the least. And we're going to try to put a few perspectives on things that are going on now and what we can look forward to as usual. So with that said, what I'm going to need you to do is click on the link in the description of this video. This will take you to my website. You will find this nice lovely video there. I want you to watch this video on my website, and we're going to look at a few charts. Well, if you happen to be on my website, let's look at a few things. Alright, first of all, let's do what we always do. Right below this video, this is my swing trading chart. A daily chart. This is SPX. If you noticed, I changed it from SPY. SPX is essentially the S&P 500, what it's doing. Again, a screaming uptrend here. Now, I want you to do something else. Go directly below this chart. You will see technical analysis for SPX. This should give you an idea. You should be able to correlate what you're seeing on this chart with the technical analysis here. It's pointing towards a strong buy. I'm going to agree with this here again, and we're going to talk about what's going on and what we can expect moving forward. For the most part, if you notice, my day trading chart there, just to the left of my swing trading chart, I don't talk too much about that. That's more for the advanced people that are getting in here and day trading. I don't think most of you are doing that. You want to get a handle on what these markets are doing. So let's start off with this. What I want you to do, the number one thing I want you to do, because this is, like I've been explaining to you for weeks upon weeks, is this is all about the 10-year yield. Forget about the whole curve. All right, we know there's a problem in the yield curve. It's flattening out. No secret. Even the mainstream is talking about it. But the 10-year yield is critical for how this market is going to trade. And also, as I have been explaining, as long as they can keep the 10-year yield in that sweet spot, and this week, the 10-year yield moved deeper into the sweet spot. It's at 2.81 right now. This means stocks are, nothing is written in stone, but stocks are going to go higher. Now, looking at this chart here, the swing trading chart, everything is looking pretty much bullish. If you look at the little meter down here, the technical analysis, bullish as well. Now, let's go over here. Let's look at that bond market chart. A lot of effort going in here. You saw a dip on that chart there, and then a lot of effort to prop those bonds up. This is not going to stop. It is not going to stop. If you look below the bond market chart, you're going to see the dollar chart. They're going to keep pressure on that dollar. There is no doubt about it. And after what came out of Powell's mouth yesterday, keeping this easy money going into whenever they decide to stop, because they have to keep rates abnormal. This is their words. This is not me. I'm not making this up. They cannot normalize rates. Let me ask you, while I'm on the topic here, how many of you find it I don't even know the word here, disturbing, I guess is a word, that was supposed to be, this is as good as it gets, it's an economic boom, but we have negative real rates here, a 10-year yield at 2.81, and according to the government's own numbers that they're fist-feeding us, we have an annual rate of inflation of 2.9. We have negative rates here in America. Who would have ever thought this would happen? Well, you would never, ever, never, ever see this in an environment where we really were in a booming economy. It makes no sense. You don't have negative rates in a booming economy. But this is what we're being told is happening around the world. Because all the world's developed economies have negative real rates. It's insane. This is all being propped up on the back of debt, which is getting progressively worse every single day. And this is why, how many times have I explained to you that they're going to create reasons like Space Force or bailouts of Italy or whatever they got to do to continue to borrow cash into existence. That's what it's all about, keeping the machine greased, keeping it fed with our blood. That's the truth, because it always leads to war. It's a terrible thing, absolutely terrible thing. All right, so let's get a couple of perspective on a few other things. Now, if you look at my swing trading chart, I want you to put in GLD, enter. All right, screaming downtrend here. A lot of people are calling for a bottom with regard to gold. This is the paper derivative. It's not real. It's not on the elemental chart. It's in fantasy land, but it exists, and unfortunately the price of real gold follows it. How many of you believe, looking at this chart in front of you, lower, 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 that we have truckloads of gold bullion that are just being sold off? It's not happening. It's not happening. So this is 100% fake. Where do I think this is going? I think they're going to continue to pressure it despite the fact that they want to keep the dollar weak. Will we maybe stabilize here? Probably. But every time gold and or silver start to catch a bid, I caught them in the act, and I posted a picture of it. We get a huge amount of paper, silver and or gold. In this case, it was silver. I posted it last week. I caught it at the moment it happened, where they dumped it onto the market using a market order. I mean, nobody would ever do this. Nobody who owns any asset would ever take a large amount of whatever they own and dump it onto the market using a market order. I mean, it's literally asking to get ripped off. If you own an asset XYZ, I don't care what it is, and you want to sell this asset, you're going to want to get the most you possibly can. Am I correct? Unless you're deranged. Okay, I don't think you're deranged. So what you would do, you would sell this thing using a limit order, saying, okay, I'm willing to sell it, but I'm only willing to sell it for this much. You wouldn't use a market order. A market order means you're willing to take anything. You just want to get rid of it at that moment, and you're asking to get ripped off, so you know it's not real. It's utterly insane. So look, so we don't waste your entire Saturday here. Here's the story about moving forward. The S&P 500 just closed at a new record high. The mechanism here is pretty simple. Keep rates suppressed for as far as the eye can see. Find more reasons to borrow cash into existence. Weaken that dollar. These are stock market positive for now, until it's not. Again, this is where no man or woman has gone before. We've never been here. And even for someone like myself that studies this morning, noon, and freaking night, it's difficult to get your head around and try to understand that this is not real. Nothing is real. And how long will it remain fake? Don't know. I don't know. So let's take advantage of it. That's what this is about. Let's take advantage of this while we can. And that means become your own central bank, bet against the debt. They want to punish gold and silver, good. Let them do that. Let's use that as a buying opportunity, in my opinion. This is for the long haul here. The debt is in the biggest bubble that has ever been seen in the history of the world. It's going to implode. I've explained to you that bubbles, every single bubble that has ever been created in history bursts. There's not one that has been able to go on in perpetuity. And the reason for that is despite every single effort to keep it propped up, like we're seeing now, at one particular point it corrects to fair value. That's been the tale throughout history, so that's what's going to happen here at one point. Don't know when, but we just understand that. With regard to the stock market, again, this is also kind of like the gift that keeps on giving. For you traders out here, I'm going to urge you again, learn credit spreads. They're not hard. They're not as glamorous, I would say, as just using, or as easy as calls and or puts, but you give yourself a pretty large margin to even get it wrong and still be on the right side of the trade. All right, with that said, I don't know. I'm going to let you all go. I hope you have a great rest of your weekend, and I will see you, I'm going to close out of this, on Monday.